Hello, everyone. I'm very excited to welcome you all to yet another promising edition of our Forex Morning Mastery. In fact, the last episode for the week. Um, Good morning to you from this part of the world. Happy Friday. And depending on what time zone you're tuning in from, I also wish you a good afternoon and good evening. Um, First of all, like to appreciate everyone for the Thanksgiving holiday. Everyone, I wish us happy Thanksgiving to everyone who is celebrating this yesterday. And I know this holiday is going to spill over in today. Whether you're tuning in from your desk, kitchen, wherever you are, I'm grateful to have you here. And Thanksgiving obviously is all about reflecting on what we are thankful for. So I want to say a thank you to this amazing community. Your dedication and enthusiasm has always inspired me on a daily basis to continue to look out for more ideas to share with you guys. Um, you are very much welcome on board. Very glad to have you around with us this morning. So far this week, we have been monitoring three financial instruments, which includes the US All Spot, the GBPUSD, and of course, my favorite, which is the XAUUSD. And so far this week, we've done fairly well across all board, I will say. Um, Though we had a little bit of challenges during the midweek as a result of the indecisiveness that gripped the market, we are going to be talking about how that happened and what led to those choppy situations we witnessed during the midweek, and of course, how we will be preparing for the last trading day of the week. And we all know that last trading day of the week comes with its own peculiarity, as we do expect that market participant may want to start taking profits ahead of the weekend. So the preparation of the weekend could bring in profit-taking activities, where we shall see this reflect on the chart as price moving in the opposite direction of the prior leading price action. And of course, if we also consider the US holiday from yesterday, we might likely be seeing a quieter market today. So we are going to be looking at how we will be navigating this market, taking into account the fundamental factors and obviously the technical side of the market. So I encourage us all to stay tuned in, as you do not want to miss out on the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you're highly welcome on board. Very glad to have you around with us this morning. And the Forex Morning Mastery is an educational avenue, not a signal service platform, but instead an avenue where we all come together to educate ourselves and become a better trader, using technical and fundamental perspective to understand the behavioral patterns of market participants. And this definitely helps us to strategically position ourselves for whatever move the market is going to present. So I welcome you all once again. We run this three times in a week. That is Mondays, Wednesdays, and Fridays, 9:30 a.m. West African time, 8:30 a.m. UTC. So I'm very excited to have you join me this morning, and feel free to engage in the comment section. And also, I will really appreciate your support as well by giving the video a thumbs up. Your likes goes a long way in helping this community to grow. The more the likes tally with the number of people that log into the session, increases the chances that the YouTube algorithm will promote the video to a wider audience of traders. So please click on that like button, and thank you very much as you do so. Now, before I go further, it's important I also emphasize, talk about Wednesday session. We are not able to run through that program. I think the session closed abruptly during the analysis on the GBPUSD due to some technical issues which was beyond us. We tried everything possible to ensure that we're back on live. We did, but it also failed again, and we couldn't continue anymore. But I was able to make up with you guys with technical setups that we used to navigate the market through the second half of the week on all my social media platforms. So once again, I welcome you on board. And with that said, I think it's high time we dive right into the business. I see you in the comment section, C40. Good morning to you. I see you, Tamiklo, too. Good morning to you, too. Glad to have you around with us this morning. So with that said, let's dive right into the business. Then before I go further, I'm planning to include um, a a segment in the Forex Morning Mastery. I'm thinking maybe Mondays and Fridays, or maybe once in a week. This segment allows me to talk to you about my own personal experience as regards to management of trades, what I've learned, what my challenges are, and how I've gone through them, how I've ascended those challenges. And I think this will also go a long way in helping us individually to manage our psychology. By now, every one of us will have known that the most important thing in trading is the psychological aspect, which for me, I see it as taking over 99.99% of the whole trading activity. So I'm thinking I should start today or maybe on Monday, but let's see how the session goes. And if we still have enough time, I will start today. But if we do not, then I will postpone it to Monday session. So I just needed to inform us on that one. So with that said, let's dive right into the business. And as always, the first thing we normally do is to keep tabs with the fundamental factors that will be or has been influencing the sentiment in the market so far this week. And by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that information that we need. And most important of them is the timing to strategically position ourselves for the next move. And of course, based on the asset we have been monitoring so far this week, we have focused on impactful events from both the United States and the United Kingdom economic docket. Now, we usually focus on high impactful event, but days where there are no high impactful event, we include the mid-tier economic event into our filter. And if we do that correctly, these are the events that has helped market participants so far this week in making their decisions, driving the sentiment in the market. Of course, we have a bunch of speeches from both the United States and the United Kingdom. I think this ran through all of the week. We are going to be talking about that in detail when I go into the asset we are looking at. And then one of the major impactful event for the week, the first one came in on Tuesday. That was the FOMC minute publication, which obviously didn't have any significant impact into the market as the proposition tariffs from Donald Trump carried majority of the midweek, bringing in that choppy situation we saw Tuesday, Wednesday, and a little bit of early Thursday's trading session. Then on Wednesday we had a couple. Is it a couple? A couple of high impactful event from the United States. We saw the core PCE, that is the personal consumption expenditure, which I did mention is one of the major inflationary gauge that the Federal Reserve usually use to understand the inflationary pressure in the United States. And this data here measures inflations by tracking prices of goods and services, which obviously excludes volatile food and energy costs. And we all understand that the higher the PCE is, it will indicate a stronger inflation, which could lead to a stronger US dollar and vice versa. Now, ahead of this event on Wednesday, we were looking at market participants and economists projecting a 2.2%, just as the previous month. However, the actual data came in a little bit lower than the previous month data, which showed us that inflation may be thinning out in the United States. However, other economic data that came in showed some resilience in the US economy. We saw the gross domestic product annualized for quarter three, which gives us an insight into which measures the total value of goods and services produced within the United States and gives us an insight into the economic health of that economy. So we saw this come in we saw it coming just as market had expected at 2.8% expansion. So just like the previous quarter, the last quarter also saw an expansion of 2.8% in the United States. Then one event that gave us an insight into how resilient the US economy is the initial jobless claim count, a data released by the US Department of Labor, and it gives us an insight into the number of people filing first-time claims for state unemployment insurances. Now, if this data had come in higher than market had expected, we may be seeing a contracting labor sector, which will be giving a signal that the US economy is not doing very well. But the data came in at 213,000, showing signs that it actually reduced from what market participants were expecting, which was pegged at 217,000. And it also reduced compared to the previous month data. So this for us was a very good signal that the labor sector is doing very well, and this could probably result into the Fed being cautious of reducing interest rate next month. Then we also looked forward to I think we've talked about the core PCE, right? And then which one again? I think that was the durable goods order was another event I told us to look forward to and look at what we saw here. The data came in 0.2% below what market had expected, giving us an insight into the manufacturing sector of the United States as compared to the expectations that economics were looking at. So these were the events we were looking at for Thursday's trading session, and of course you can see we had a mixed data from the United States. So we need to see how the market had reacted to this event. We want to see how the market had digested this information and what the likely plans are going to be following the aftermath of this economic event, which is today's trading session. Now, for today, Friday, November 29th, we do not have any impactful event really from both economy, except for the United Kingdom, which has this mid-year economic data, which is the Financial Stability Report, usually released twice in a year by the Bank of England, and it shows the committee's assessment of the outlook for stability in the financial sector in the United Kingdom. So if the Bank of England is hawkish about this report, it could send some positive signals in favor of the British pounds, and if otherwise it could send a negative traction. So this is the only event we're looking forward to today, and this is coming up in about 2 hours from now. That's 10:30 a.m. UTC. That's 11:30 a.m. West African time. So you want to mark this one out. We want to see how the market is going to also react to the outcome of this report. So besides this, there are no major events to look out for. So what we will be relying on today is our technical skills to understand the behavioral patterns of market participants. Can we find an insightful trading setup that could help us navigate this market today? So with that said, let's dive right into the charts. So as always, the first asset we are going to be looking at this morning is the USOILSPOT, and in fact this week I've really not gained too much in this particular market, though we had a sell at the beginning of the week after a failed buy which closed at break even, and ever since the sell position we took on Tuesday, the market has been a little bit choppy, showing that there is an indecision going on in this market. And we want to be asking ourselves, why is the market so indecisive in the last 2 to 3 days? And for those of you who watch the financial news, there's been a lot going on behind the scenes. One of the major factors influencing the indecisiveness in the market is the 4-day postponement of the OPEC Plus discussion, which has added uncertainty to the market and which could deter any bullish or bearish sentiment at this point in time. And of course, the upcoming OPEC meeting is now scheduled to happen on the 5th of December, and majority in the market are looking forward to discussions as regards to extending production cuts into 2025, keeping the market cautious and limit any downward or upward pressure in the market. So this market here is going to be subject, or let me say all eyes will remain on the upcoming OPEC Plus meeting for further direction. So as a result of this, I'm beginning to consider leaving this market, except if I see some significant confirmations that shows that price is likely going in a particular direction. Now, what are the factors that could influence this market positively? Of course, the geopolitical tension is right there at the top of the table, as we've talked about this through the course of the week. Though there has been reports of Israel and Hezbollah going through a peace treaty, but lately there has been some exchange of accusations of ceasefire violations in that area, which is also causing some tensions. And then we also have the Russian-Ukraine situation, where the Russian president is warning of potential nuclear capable missile strike. And this for us could support oil prices due to heightened geopolitical risk. Then besides that, if we look at the structure this market is projecting on the chart, you would notice that the market, though we have been seeing some inability of sellers breaking through that barrier between the 68 and the $68.50 level since Tuesday's trading session. Besides this, it is quite clear that the market has been on a downtrend ever since the Tuesday's trading session, which makes the path of least resistance for the USOILSPOT to the downside. Now, if we look at the rising borrowing cost in the United States, which is considered to be the world's largest oil consumer, this is weighing on economic activity, and this could reduce crude oil demand in that particular area. And when demand for a commodity is reduces, what happens? Price definitely will drop. Then we can also take into account the resilient US economy. We saw the core PCE price, though it suggests that um, inflation is thinning out and bringing in hope for a December rate cut. However, other US data indicates a resilient economy, which could lead the Federal Reserve to maintain a cautious monetary policy, potentially impacting whole demand negatively. We all know if this happens, the value of the US dollar will remain high, making it very expensive for other currencies to convert to buy the US oil spot, and this may reduce the demand for this commodity, pushing price to the downside. Now, if we take all of this into perspective, you will see that the price of the US crude oil is caught between geopolitical tensions that support prices and concerns over demand due to high borrowing costs and, of course, a resilient US economy. Now, what is the market doing? How is the market digesting this information? Well, we'll see this on the chart reflect as price action. Now, if we look at the structure closely, you will see that in the last 2-3 days, the market has been confined within a range bound structure that is between the 69.25 and the $68.55 level. Initially, the first half of the week was more of a downtrend scenario, resulting in this bearish trend line you see here. However, the last 24 to 36 hours saw this trend line breached and broken to the upside. As you will see, price broke out, retest, but the momentum was not strong enough to significantly break out of the $69.25 level, which further emphasized the prevailing uncertainty. However, if you look at the last 3 days, you would have noticed that the market has been going through some series of higher lows, but yet to find a higher high. So I have two trend lines here. We have the ascending trend line here and the descending trend line. Now, if price action continues to maintain buy pressure above the ascending trend line, it could trigger some bullish expectations. But for me to join a buy at this juncture, I would rather want to see price action break out of that range bound structure at the resistant line located at the $69.25 level. Now, not only will this breakout give me a signal, I would like to wait for a confirmation to happen, which is going to be like a breakout retest of the structure before I can confidently jump into a buy. Now, if this does not happen and price continues to oscillate around the trend line, leading to price breaking down the trend line, this could incite some selling ideas. However, like I did say, due to the indecisiveness of this market, I would like to wait for confirmations to happen before jumping into a buy or sell. So a retest of structure followed by continued selling pressure on my lower time frame, let's say the 5, 10 or 15 minutes time frame, will give me a confirmation to go to the downside. Now, if no confirmation happens and we see price just break through the structure and no confirmation happen, I will just leave that trade to play out. I would not force myself dabbling into the trade. So we need to be very careful here in this particular market, especially when majority of market participants are looking forward to the upcoming OPEC Plus meeting, which is coming on the 5th of December for further direction. So we need to be really, really careful here. I already made up my mind that I will not be trading the US all spots. I will only trade if the structure gives me a significant confirmation. And what does that mean? A breakout retest of structure, my lower time frame, before I jump into either a buy or sell from this particular area. So this is my simple view on the US oil spot today. Let's see how the market will play out in the next couple of hours around the current structure we have here. That is the ascending trend line and the $68.55 level. So if you have any questions or you need any form of clarifications, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in and do not forget to click on that like button. Thank you very much as you do so. All right, so in the absence of no questions, I want to assume. Okay, I see your comment C40. Very clear. Okay, I'm staying out of this market for now. All right, it's okay. That's my thinking too as well. Except something significant happens that gives us a sign that buyers or sellers are gaining momentum. So that is that on the US All Spot. And in that regard, let's move into the next asset on our watch list. Stay tuned in. So the next asset we are looking at is the GBPUSD, that is the British pounds against the US dollar. And in fact, as at Wednesday morning, was it Wednesday morning or the later part of Tuesday's trading session, I was beginning to regret choosing the GBPUSD for this week after that choppy market condition we saw at the beginning of the week. Remember, we had a sell at the breakdown retest of the 1.25720, which moved about 60 pips before the bullish momentum came in. And remember, prior to that sell, we had a couple of losses. We had a loss here when price got triggered at the breakout of that resistance line at the 1.2607. We also had a loss here at the breakdown retest of that support line at the 1.25720 before that bullish traction began on Wednesday. Later part of Tuesday, and then some of Wednesday's Thursday's trading session. And at this point, I'm happy to say that the pair has rallied over 200 pips since the beginning of the week, building on recoveries along that ascending trend line we marked out at the beginning of the week. Thankfully, we were able to get to some points before the live session on Wednesday went out. Remember, we were talking about the potential of the breakout of the key level at the 1.2600 area, which interestingly shares a confluence with that major ascending trend line we identified on the 4 hours time frame. For the sake of clarity, let's run through that quickly. So we were looking at the 4 hours time frame here. Was it here? Okay, it was on the daily time frame, I think. I think it was on a daily. Yes, exactly. It was on the daily time frame. So this was what we were looking at on Monday and Wednesday's trading session. We did took into account the character of price action since November 2022. That's approximately 2 years of historical data, and we were able to confirm that the trend has always been bullish. And to emphasize that, we had this beautiful ascending trend line capturing the pivot lows since then. And we went on to talk about the importance of where price action was at the beginning of this week after identifying our key level for the week at the 1.26 area. Now look at how beautifully the trend line and that key level lines up together at this juncture, giving us a crucial confluence to navigate this market for this week. So at that point, we were looking at what will happen there depending on how the market reacted to that confluence. We were saying here that will this breakdown turn out to be a false one? If it does, we will see price climb back up. But if it turns out to be a true breakdown, we may likely see price retest the structure in an attempt to continue the downtrend move. And as a result of this sensitive confluence, we were stopped out in multiple trades at the beginning of the week, but thank goodness we were able to identify structures that will help us join this uptrend move. And after the abrupt end to Wednesday's live session, I did give us an update on my Telegram platform on what structures we are going to be using to navigate Wednesday's trading session. Was it Wednesday or Thursday's trading session? Remember the buy position from, let me go back to the 1 hour time frame. The buy position from Tuesday was running. I had my TP target hit at the 1.268 with about over 200 pips. Remember, we had multiple entries here where we had our first buy at the 1.254 right here, and then we added another one at the 1.25720, and during Wednesday's trading session, price finally broke out of the 1.26070 to give us 3 buy positions. And I did updated us on my Telegram platform of a new trading setup. For those of you who are part of that community, you remember this is what we were looking at. I think that was yesterday. Yes, yesterday morning, I was able to identify this simple structural detail on the 15 minutes time frame. We had a descending channel following that impulsive move that hit the TP on Wednesday. Then we had this support line of the descending channel. And besides the structure, we were able to mark out 2 lines. We had a 1.26650 level and the 1.26550 area. So initially, the sell position was triggered, which unfortunately did not do well, went into a loss before the buy position was successful at the breakout retest of the 1.26650, and since then the market had moved significantly in our favor. So we can see price moved over 80 pips thereabouts before this bearish momentum came in during the early hours of today's trading session. And for those of us who are part of this profitable journey, well done and kudos to you. So at this point in time, I'm already out of the trade. This strong bearish move took me out of the positions I had. I hope that is the same case with you as well. Remember, when price moves significantly in our favor, we ensure to move stop losses, secure the position while we look out to see how the market is playing out. So if you have done so, well done to you. But if you are still in the trade, I will advise you to move all stop losses. Let's secure the current position. I'm suggesting anywhere between the 1.26950 and the 1.269 seems most appropriate to secure this position. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Now, before going into the technical details of what to do today, let's take into account what the positive and negative drivers for the British pound are heading into today's trading session. Now, to top the list here is the reduced rate cut expectation from the Bank of England. In fact, from the sentiment report I got this morning, a lot of traders have scaled back their bets on a potential Bank of England rate cut after October's UK data indicated a stronger than expected price growth, and this for me is a supporting factor for the pound sterling at this point in time. Then to add to the woes of the US dollar is a subdued demand for the US dollar due to market pricing of a 70% chance of a Fed Reserve rate cut in September. And of course, to add to this is the declining US Treasury bond yield, which for me may continue to provide upward momentum for the GBPUSD pair. Now, in as much as the path of least resistance is looking promising to the upside, we still cannot ignore the geopolitical risk and trade war concerns, which could enhance the US dollar's appeal as a safe haven currency, potentially limiting the pound sterling gains. And of course, we also we saw some hawkish Fed outlook from the FOMC minute, which suggests that the Fed could pause rate easing if inflation remains elevated, and this may strengthen the US dollar and also cap the GBPUSD upside. Now, a combination of uncertainties, including subdued market sentiment and lingering inflation concerns in the US, might deter traders from aggressively betting on further appreciation in the GBP, in the British pounds. So for me, the British pounds benefit from a stronger UK economic outlook and a weaker US dollar, though external factors like geopolitical tensions and cautious monetary policy stance may temper this momentum. Now, how do we navigate this market, taking all of this into account? Of course, we want to see how the market is reacting to this recent development. Now, to look at the structure here, considering the last 24 hours, it is quite clear that the market is bullish already. We've had some series of higher highs and higher lows, and if we are to capture them, I would like to capture the higher lows first, which is this one right here, giving us a beautiful ascending trend line going into today's trading session. How you know how we treat our ascending trend lines? As long as price action remains above them, we will continue to maintain a bullish bias. That is, we continue to look out for structural patterns that support buying ideas. Now, if that is going to be the case, look at what is going on here in the last 1, 2, 3, 4, 5, 6, the last 1.5 hours. You can see that price is back into that ascending trend line. And for the last 1.5 hours, we've been seeing price oscillate around that area as sellers appear to be finding it difficult to break through the trend line. Now, the question going into today's trading session is, will this trend line be strong enough to uphold this bullish momentum, or will the trend line be so weak that sellers will break through, inciting a temporary sell-off? And this could be as a result of profit-taking activities ahead of the weekend. Now, to help us navigate this important confluence here now, since this is where our center of focus will be, it appears that we are looking at a potential reversal pattern, which is looking more like a double bottom at this point in time. It could evolve into some other structure, but at this point in time is looking like a double bottom structure, which theoretically is considered to be a strong reversal pattern. Now, whenever we identify such reversal patterns, the next thing we want to be doing is to mark out the neckline of that reversal pattern, and that area will be serving as a validation point for us to know if this is truly a reversal pattern or not. And look at what we have here, right around the psychological level at the 1.27100 level. We have a beautiful neckline to work with for today. Now, what this simply means is that a breakout retest of this neckline will be a good confirmation that price will continue the uptrend move. So we look forward to buying another breakout retest of the 1.271 right here on the 15 minutes time frame. Then we also have a high here at the 1.27425. That's the highest point price action has been for this week. So we do want to be marking that level how to as well. 1.27425. Want to mark that one how to. So if price continues to climb, a breakout retest of that structure will welcome more opportunities for us, making us to maximize the uptrend move. However, if the market decides to start taking profits of the chart, in fact, it has started happening, and if they want to continue taking the profit, maybe due to the uncertainty, including a subdued market sentiment, and of course, inflation concerns in the US, we may see sellers take over the market ahead of the weekend. And if this is going to be the case, we are looking at a breakdown retest of the psychological level at the 1.2700 area. Now, for myself, I would like to see a breakdown retest happen. Remember, this is an uptrend scenario, and whenever you want to be taking a counter trend opportunity, you want to make sure that one that you are taking. So we wait for a breakdown, then a retest of structure. Now, this is the trend line. Look at how beautiful it lines up with the 1.27 area. So if price can break down the structure, it could be a good signal, but we are not jumping into it right away because it could still turn out to be a false breakdown. So we want to see price come back, retest structure on the 5 minutes time frame for us to confirm a sell. Now, if that happens and anything comes up, I will definitely give us updates on my Telegram platform. But I still doubt a breakdown retest of this 1.27 will happen, considering the uptrend scenario we've been witnessing so far, which has been bolstered by the reduced rate cut expectation from the Bank of England, and of course a weaker US dollar at this point in time. So for me, I still strongly believe that the path of least resistance for the GBPUSD still remains to the upside. But if a breakdown retest of the 1.27 happen, we have no other choice than to follow the market's direction. So this is my simple view on the GBPUSD for today. So our center of focus is basically between the 1.271 and the 1.2700 area, where depending on the direction of the breakout will determine where price action is likely going today. So that is my simple view on the GBPUSD for today. Let's see if we have any questions whatsoever before we move on to the final assets on our watch list today. So I see a comment here from C40 who says here that It wants me to explain my process to add positions to an already winning positions. Well, this is a question I've talked about countless of time here. So it's quite a simple one. So let me take this case scenario to explain this. Now, for instance, we have a buy position triggered at the 1.271, right? And the next point of entry is going to be at the break of the 1.27425, right? So we have a buy stop order sitting above that structure, and price had already moved about 30 pips into triggering that position, and it had moved a little bit higher. So we'll just move the stop loss of the first position. Usually I move the stop loss of the first position to break even, while I move the stop loss of the second position into the first entry point. However, in this case scenario, the distance between the second entry and the first entry is too wide. That's about 30 pips. So I look for the lowest point here, the previous low here, which is around the 1.273 and the 1.272. So while the second stop loss falls between the 1.273 and the 1.272, so I will move the stop loss of the first position. Remember, this will have been running with about 35 pips in profit. So I will just move the stop loss into this zone. So that means that the worst case scenario for that stop loss will be a minimum of 11 pips to 20 pips of stop loss. So the second position to have a stop loss within this area. So that is how I stack up the position. So if price continues to go, we also have another entry points, maybe a third entry. We move all stop losses for the first and second position to the stop loss of the third entry. So what this simply means is that if at any point in time price action takes us out at that entry, the first two position will do very well, while the third position will close in a loss. At the end of the day, we are still going to have a positive outcome from that particular trade. So that is basically how I do it. So I hope my explanation is quite clear enough. If it's not, let me know. I will rephrase my statement and make it much more clear. Thank you very much. So in the absence of no further questions, I want to assume that we are all on the same page. So with that said, let's move. All right, you're welcome, C40. All right, so in the absence of no questions, I want to assume that we are all on the same page. So with that said, let's move right into the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. Well, the last 2 to 3 days have seen a significant recovery in the price of the gold commodity, especially after we saw that strong bearish move that started at the beginning of the week. And this has been due to concerns about the US President elect Donald Trump's tariff plans and ongoing geopolitical tensions, particularly from the Russian Ukraine war, which continues to fuel haven flow, safe haven flow into the gold commodity. Then we also have the weaker US dollar at this juncture. The US dollar appears to be struggling due to expectation of a December Fed rate cut, and this weakness obviously continues to support gold prices. Then we also have the US Treasury bond yield, which is also not doing very well at this point in time. I want to consider that to be a corrective move of the bullish momentum we saw in the last couple of weeks. And to further support the gold commodity at this juncture, I was looking at the CME FedWatch tool this morning, where market bets on a 70% probability of a Fed rate cut in December. And for me, I want to consider this as a positive signal for the gold commodity. Now, let's look at the what happened at the beginning of the week around the gold commodity, and what led to the situations that made us to buy and sell at both point in time. So we saw here at the beginning of the week, though we missed out on that first sell position. Remember, this happened during the Asian session, and for me, I'm still fast asleep when this whole situation happened. Price dropped significantly into the 2006.58. And for those of you who saw my commentary on Monday around this structure, I said that since this market dropped significantly at the beginning of the week, it could be a good signal that this week is going bearish, as we may start seeing some profit taking activity and a recovery in the US dollar. So I said here that since we've missed out on that opportunity, we shall exercise patience to see how the market is going to be reacting to the 2006.85 area. Now, what we agreed here is that if a breakout retest of the 2006.85 happens, we continue the uptrend move. But if price continue to find selling pressure around the 2006.85, we will sell. So initially, I had a buy position triggered. Obviously, that did not do very well as we had price take us out in a loss on that one before that bearish momentum came in. And in fact, we saw price move over 80 pips thereabout, as you will see here. Then we also had a second entry at the 2006.58, which was the support line at the beginning of the week, which got broken, and that also moved about 250 pips thereabout before that bullish momentum came in. And since price tested the 2006.05 on Monday, we begin to notice that sellers were finding it difficult to continue the trend, and this was obvious on the charts after noticing series of higher lows. And I think we had a couple of structures on the 15 minutes time frame to help us navigate this market. Let me see. Okay, yes, we had one right here that was on Wednesday's trading session. I updated us with this structure here after identifying a consolidation phase between the 2006.54 and the 2006.45. Interesting enough, this consolidation phase was immediately after this ascending trend line. So we were looking at a potential uptrend continuation. That is, if price goes ahead to break out of the 2006.54, we will join a buy and continue the uptrend move. Obviously, that happened. but it didn't do very well as price action broke back down, and this led to a sell position triggered at the breakdown of the 2,645. So we were able to take that short-term sell position as we saw price action move over 240 pips thereabout, as you will see here. Move stop losses accordingly depending on where you have moved your stop losses to. You must have taken some significant amount of profits on that one. Then yesterday's trading session, I think I updated us with a new technical setup. This is it right here. This was yesterday's trading session. We had this beautiful structure marked out on the 15 minutes time frame after identifying an ascending channel right here, giving us signs that buyers are getting stronger. And what we did agree in that commentary is that we are going to be taking a buy at the breakout of the 2,640. Now, for me, during yesterday's trading session, I decided not to take multiple entries, and one of the reasons why I decided not to do that is simply because of the holidays. Remember, yesterday was the Thanksgiving holiday, so the US market was observing that, so definitely they were absent from the market, and I was thinking that the trading activity will be very much subdued due to the US traders not being in the market. I never knew to move this far, so I decided to just take one trade, allow it to play out, had my stop losses below the 2,635 right here, and allowed that trade to move. And waking up this morning, I saw price action had moved over 200 pips in our favor, and for those of you who took this trade, well done and kudos to you. So at this point in time, we have about 200 pips, only one position. And if you are taking multiple entries, well done, kudos to you if you have done that. So at this point in time, it is high time, if you have not yet, it is high time you want to be moving your stop losses. And in fact, suggesting anywhere around the 2,656 and the 2,654 area seems most appropriate to move all stop losses to. And this is quite simple. You see we have a couple of demand zone here where sellers have found it difficult to break through. So for me, that is the most appropriate area to move all stop losses to at this particular point in time. Now, with a well-secured position at this juncture, how do we intend to move going forward? Now, first of all, we need to take into account that today is the last trading day of the week, and we all know this psychological peculiarity that comes with days like this. We expect that market participants will start rounding up their trading activities ahead of the weekend, and in an era of geopolitical tensions, we may likely see a price move in the opposite direction, a reflection of profit-taking activities, as those who had bought the the crude oil, the XAUUSD may start taking some profit off the chart ahead of the weekend, which could lead to price dropping to the downside. Now, in addition to that is the signs of stalled progress in lowering US inflation and concerns over Trump's inflationary policies, which might limit the Fed's scope for further rate cuts. Now, this could potentially cap the recent uptrend scenario we are seeing in the gold. Now, another thing that could also influence this market is the spillover of the Thanksgiving Day holiday in the United States, and lack of major economic data releases today could also result in reduced market activity, limiting any significant move in price movement. So for me, gold still remains supported by safe haven demand, a weaker US dollar, and Fed rate cut expectations, but faces potential limitations from thin trading conditions and uncertainties around the Fed policy direction. Now, with that said, how do we bring this into the chart after taking into account the character of price action, at least in the last 24 hours. Now, the first thing I will say here is that we do have a demand zone already. We have a support line at a psychological level, which is at the 2,656. So I just want us to mark this level out right away. I would like to give this a different color. Let's use the red color in this case scenario to emphasize its importance for today's trading session. So we have the 2,656 level, right? Right there. That's a support line to work with for today's trading session. Then secondly, we have a structure around this area that was broken during the Asian session. This is a structure here that we cannot ignore. So if we bring out our line chart, so we have a structure here. So we need to mark that structure out. It could be a platform where a retracement move could come into. And in fact, if we look at the distance between where price action is right now and that level, we are talking about approximately 200 pips, which is not something you want to be missing out on if price moves in that direction. So we saw what happened during the Asian session. Price broke out of that structure right there. A very good support line also. So we do want to be, that's about 2,645 or 2,644. I think 645 seems convincing. Okay, so we have 2,645, right? So you want to be marking that one out too as well, 2,645. So price broke out of the 2,645 here, and theoretically, when price action breaks out of a key structure like this, we do expect that some point in time, price is likely going to come back, retest the structure. It could be the 2,645 or the descending trend line in an attempt to continue that uptrend move. So we are looking at, if price breaks down the 2,656, a minimum of 115 pips to a maximum of 200 pips if price moves significantly further. And if you look at what has been going on here since the later part of the Asian session, following this impulsive move, the market has gone through a consolidation, and this consolidation appears to be evolving into a reversal pattern. We could call it a head and shoulder pattern. That is, and this will only mature if the 2,656 gets breached and broken to the downside. So that will only mature if this level is breached and broken to the downside. So I want to see price breakdown, retest the 2,656 for me to continue a downtrend move, placing my TP target around the 2,635. And remember, this is a counter trend opportunity based on the short-term trading idea. You want to be moving your stop losses accordingly as soon as price action moves in our favor. Now, in as much as this is considered at this point in time, we cannot ignore the potentials that buyers are still very strong. Remember, the safe haven demand for gold following the geopolitical tensions and Donald Trump's tariff plans. We also have a weaker US dollar at this point in time, a low treasury bond yield, and a dovish Fed expectations, and of course, inflation concerns in the United States. Now, all of this makes the path of least resistance for gold still remains to the upside. So we are not going to ignore this possibility at this point in time, especially after seeing that in the last 6 to 7 hours, sellers have been finding it difficult to break through the 2,656 area. And if this area continues to serve as a demand zone or a barrier for sellers, it could be a platform that could send price going further to the upside. Now, to help us navigate the uptrend scenario here, I think we have a trend line to work with at this point, that if it gets broken and breached to the upside, we will definitely continue that uptrend from that particular area. Now, what levels are we using here? I think we have something around the 2,000 662. So I'll give this a green color. Let's make it green. So we have $2,662 level right there, and $2,662 level. So you can see it shares a confluence with our trend line too as well. So if price goes ahead following this bullish attempt from here, sellers are finding it difficult to break through. A breakout retest of structure will be all we need to continue that uptrend move. So that is one way we are going to be joining an uptrend scenario from this particular area. And if we are buying above the 2,662, make sure you have your stop losses way below the previous low. So we are looking at between 80 to 85 pips of stop loss on this particular buy position. And if there are any new structural updates that comes up after maybe into the New York session today, I will definitely update us on both my TradingView and Telegram platform. So this is my simple view on the XAUUSD today. So to indicate this, we're looking out for buy at the breakout retest of the trend line under 2,662 and looking out for sell at the breakdown retest of the 2,656, which could be a counter trend opportunity back into the trend line to continue that uptrend scenario. So let's see how the market will play out from here. This is my simple view on the XAUUSD today. And for the go-go challengers, I will be running the go-go challenge today too as well. We will be scalping this market using the same structure to scalp the gold market together. I'm sorry we were not able to run the go-go challenge on Wednesday. The same thing that happened to the Forex Money Mastery. We had technical issues and we didn't get it resolved until later on Wednesday's trading session. So today we are going to be continuing from where we stopped on Monday on the go-go challenge. So I look forward to seeing you guys right in that session. That's in about an hour 30 minutes from now, maybe a couple of like 30 minutes into the New York session, we shall begin the scalping of this market. So this is my simple view on the XAUUSD, and please do not forget to give that video a thumbs up. Remember what I said earlier, your likes are very valuable to me, and it also goes a long way in helping helping these communities to grow, as the more likes we have tally with the number of people on board, increases the chances that the algorithm will push the video to a wider audience of traders. And for those of you who actually took that effort to click on the like button, I really appreciate your support. Thank you very much for what you have done. And for those of you who are here to do so, please click on that like button right away, and thank you very much as you do so. So I will take the next 5-10 seconds off. Let's see if there are any questions whatsoever before we round off on today's Forex Morning Mastery. See you all in about 5-10 seconds from now. Cheers. All right. So, in the absence of no questions, I guess we are all on the same page, and it has been a wonderful moment with you guys. I really appreciate every single one of you and your support so far. Your likes, your presence, and everything has been wonderful and inspiring for me. Unfortunately, due to the limited time I have, I will not be able to run through that section today, so I will postpone it till Monday, where I will be sharing with you real-time experiences, lessons I've learned, especially during my scalping approach, and you might also need them for your own personal experiences too as well. So Monday I will be sharing them with you. So we are going to be having that section. I don't know the subject, I don't know the title I will call it. Maybe the Traders Corner, whatever it is. But by the end of the Forex Money Mastery, we'll have it. So I'll talk to you about my experiences and lessons to learn and how we need to navigate these challenges when they occur during our trading session. So let's look at Monday for that particular one. So today we were able to take on all of the asset we are monitoring so far this week, which includes the US All Sports. The US All Sport, we really did not do very well this week. The traction has not really been significant. The market has been very choppy for most part of the week, but we were able to identify a setup that could help us navigate if the market gives us a signal. Then we also look at the GBPUSD, which did not start very well, but at the end of the day, we were able to recoup the losses we incurred and made some profit on top of it. And finally, we also looked at the XAUUSD, which has done tremendously well so far this week. So we are hopeful that today will continue like that. So let's be hopeful. And I want to wish us all the best of luck on that one. And for those of you who joined us for the first time, you are highly welcome. And I hope you are able to gain one or two things from what we have discussed here today. So I look forward to seeing more of you same time next week, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to start the week on a positive note. So I look forward to seeing you guys then. So it's on this note I would like to wish us all the best of luck today. I wish you a wonderful weekend. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.